The world of finance is a complex and ever-changing one. It's a place where fortunes are made and lost, where the actions of individuals and institutions can have a profound impact on the global economy. It's a world that's both exhilarating and perilous, and it's a world that requires constant vigilance and analysis. As we stand at the precipice of October, a month known for its historical significance in the financial markets, we find ourselves grappling with a market that has been in free fall. The markets have been sliding since August, and September has seen no respite. The question on everyone's mind is whether October will bring a turnaround or further turmoil. To shed light on this conundrum, we turn to the Magnificent Seven, a group of stocks that have historically held significant weight in the financial markets. These stocks, which include giants like Apple, Microsoft, and Amazon, have the power to sway the entire market with their movements. And in today's analysis, we're adding an eighth member to the group, Netflix, because it's become an influential player in the entertainment and tech sectors. Our journey begins with a simple premise. We need to understand where these stocks stand today. Are they at all-time highs or local highs in 2023? Have they weathered the storm of recent market declines, and if so, to what extent? Are they showing resilience and bouncing back on red days, indicating potential strength in the face of adversity? Let's start with the leader of the pack, Apple Inc. Apple has long been regarded as a bellwether stock, a company whose performance can be indicative of the broader market's health. In 2023, Apple reached a remarkable milestone by hitting an all-time high of $198. This achievement is not to be underestimated, especially in a year marked by market turbulence. It signals that Apple continues to command a dominant position, not only as the world's largest publicly traded company by market cap but also as a symbol of stability in uncertain times. Yet, even Apple has not been immune to the recent market decline. It has retreated from its all-time high, and as of this analysis, it is teetering around the $174 mark. The critical question is whether Apple can hold this level or if it will breach support and descend further. Support at $174 is the line in the sand that many investors are watching closely. A break below this level could signify deeper troubles for Apple, while a rebound from here might signal an attractive entry point for those looking to position themselves in this tech behemoth. It's important to note that Apple's significance goes beyond just its stock price. It's a company that represents much more than its market capitalization. It's a symbol of innovation, resilience, and a testament to what visionary leadership can achieve. Apple's product ecosystem, spanning from the iPhone to the Mac, from wearables to services, has created a loyal customer base and a reliable stream of revenue. For long-term investors, the current pullback might be viewed as an opportunity to own a piece of this tech giant at a discount, with the potential for future growth. Moving on to Microsoft, we find another tech titan that has navigated the tumultuous market waters of 2023 impressively. Microsoft, too, reached a new all-time high this year, reinforcing its status as one of the world's most valuable companies. At the time of this analysis, it sits at around $310, which is not far from its peak. However, what's intriguing about Microsoft's chart is its proximity to the lower end of the Bollinger Bands. For those unfamiliar with Bollinger Bands, they are a technical indicator that measures volatility and helps identify potential reversal points in a stock's price. When a stock breaches the lower Bollinger Band, it may suggest that it's oversold and due for a bounce. Microsoft appears to be in this territory, and this could pique the interest of traders looking for a potential short-term play. But let's not forget the fundamental underpinnings of Microsoft's business. This is a company that has successfully transitioned from a software-focused model to a cloud computing powerhouse. Its Azure cloud platform is a key player in the cloud wars, competing fiercely with Amazon Web Services, AWS. Additionally, Microsoft's productivity suite, led by Office 365, remains a staple in businesses and households around the world. The recent market turbulence may be seen as an opportunity for investors to accumulate shares of Microsoft, a company that has consistently rewarded its long-term shareholders. The trend towards digital transformation and remote work, accelerated by the global pandemic, has only bolstered Microsoft's position in the market. Now, let's shift our focus to NVIDIA, a company that straddles the worlds of technology and finance. NVIDIA is a semiconductor manufacturer known for its graphics processing units, GPUs, and is an essential player in industries ranging from gaming to artificial intelligence, AI. In 2023, NVIDIA reached its own all-time high, a remarkable feat given the challenges faced by the broader market. As of this analysis, NVIDIA is trading around $409, and it's essential to highlight its position in the Bollinger Bands. Unlike Apple and Microsoft, NVIDIA is already at the bottom end of its Bollinger Bands. This suggests that it may have less room to fall before potentially bouncing back. However, it's crucial to consider the broader context. Semiconductor stocks, including NVIDIA, have been in focus due to supply chain disruptions and a global chip shortage. These challenges have introduced a level of volatility into the sector, and investors should proceed with caution. NVIDIA's position as a leader in AI and data center solutions provides it with a solid foundation for future growth. Still, the short-term outlook may be influenced by industry-specific dynamics.